Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, Anthony here, looking at gold XAUUSD. Actually, I've got it open on a 4-hour. Let's go out to the daily and I'll show you what I've marked up, and then we'll do a quick top down. What I've done, I've just pulled this through. This is this red candle back here, just taking the candle body high and low. Okay, that's a level. And then we've got this green candle here. If you have a look at this daily, that's the one. Just taking the candle body high, low. That's it, right? So this range is what I'm interested in. We're trading in the middle of this range at the moment, or down the lower end of it. So that's that. Then we've got the 4H. And as we go down the time frames, these levels will make a lot more sense. So there's our daily. Now, if you have a look here, we've got this 4-hour. What I've done is I've taken the high and low of this green candle here prior to this move, and 4-hour here. I've actually pulled that through from back here, taken the high and low of this candle, this balance area back here. All right, so this gives me this nested level here up the top and this nested level under here. So this is the range that I'm interested in, as well as this guy. Now, if we have a look at that, right, that's this candle back here. So I'm just looking for target levels at the moment. I've set up a sell zone, even though that's actually a higher high, and that's actually a higher low. So just be a little bit careful with this. I do like what I'm seeing, say, from this point back and this head and shoulder setup, pull back, and then this price action down here. It looks like it wants to roll over, but be careful. What I've done is I've set up a sell zone, and to mitigate risk, I'm going in with a market sell here. I'll just show you how I'm doing this, by the way. We're going in with 0.2% of my account market, and then at the high or the low of this daily level here, and that's my sell zone, I'm going in with 0.4%. This will add up to 0.6. So that's how I'm kind of organizing my risk. We've got this sell zone, and I'm allocating 0.6% of my account. So if you add these two up for my position size in here. All right, now here's the thing with this. If this rolls over here, that's the trade I really want. And this is how I set up all of my trades. You got to keep an eye, see on this this distribution level here on the 4H. You got to watch these levels, and I really prefer to trade around these 4-hour levels, right? So this is actually fairly overextended here. Be careful. There's a good chance this could pull all the way back up in here, looking for these levels. In any case, I'll go in with a market sell, and if it does roll over here, because sometimes you get a shallow pullback, I'll be trailing that with my stop loss. This is the trade that I really want. If it happens to pick up a bit of bullish momentum and it trades back up into this level here, and that's a fill, it only takes that for this entire, call it a basket of trades if you want, these 3 trades here to be in the money. So this to reject here and to trade back down here, and this is profitable. This is where I close out. This acts as a sort of a safety barrier. It's not a stop loss as such, but it kind of is, if that makes any sense. My stop loss will go up above, like we've got this 4-hour daily combo. I'll go above these highs. So up in here, above, halfway through this 4H, I'll go just above that. I'm okay with that. So there's my stop. Watch out. This is volatile. Okay. Not an easy gig trading gold, but this is how I go about it. I mean, I'm building accounts with this strategy using these 4-hour levels, green candle back here, potential that this possibly trades back. Have a look at this price gap. That's this candle here. There's nothing left and right of it. So I've just pulled that through. So this is a target. I'll just grab my pencil and show you this. And what I'm going to do after this is go down to a lower time frame and show you how you can get involved and navigate the volatility really well. This whole level here, like if we have a look at that, this price gap, this daily 4-hour combo, that's it. This is a key level of resistance right there, right? So I'm good to set up a sell limit and a stop loss above, and everything's hunky-dory. So if this fills, I'll close it here. I'll shut the trade down. Okay, ultimately I want this to happen, and I want that trade. If that happens, I'll follow it down with my stop loss, and happy days. If this happens to pick up bullish momentum and we see this one get taken out, I want to close it. And there's a pretty good chance, given that this is a big level, of resistance right here at the base of this daily order block. It should, in most cases, give us that. That is profitable to close everything here. Now, if it happens to push through here and we get taken out, fine. 0.6% of my account, that's the risk I'm willing to take. I get about a 90% win rate with this strategy. So every now and again when the stop gets taken out, it's really no big deal. What else can I say? Oh, and the most important thing is really let these run and get the most out of that, because there'll be a percentage of your trades that will do that, and you just follow the trend until we get a break of structure. Easily done. Now, that's that. So what I want to do is actually go down and show you. This is speculating, okay? So I'm assuming I'm not going to be in front of the computer. I'm going to set up the limit order, the stop loss. This is a market. I can close it down, walk away, and leave this alone, let it play out. If I'm in front of the computer, as I am quite often, then this is going to be the strategy. In fact, we've already shorted gold. Now, have a look at this. There's the signal. This is now in the money. When this fires, this is a red dot. What I want to see on the chart is that. On the chart, this is telling me that the 4-hour and daily are agreeable and there's strong momentum bearish, as you could see back here. And then we had this picked up here and that shut that down. But no problem, because this is predominantly bearish, given this indicator down here is showing 3 out of 4 red. All right, so I'm going to go with this, and I'm going to assume that that is a stop run. I'm looking for short opportunities. So there's a red dot here, there's a red dot here, and I'm going to go in with this is the ATR down here. I'm looking for 2 times the ATR roughly. You know, you can go the width of this, the cloud here. See the width of the cloud? That's about it. Have a look left of the dot, pick up the width of the cloud. See this dot? Have a look left, pick up the width of the cloud. Okay, that's your stop loss level. And we're looking for a 1-to-1. So there's target reached, and this is where you close 70% of your position and you pull your stop to be in the money. So both of these have made money. This one here, well, this one's still running. So we'll just follow that and see how far we get with it. Now, take you back. By the way, guys, click the link below, join our Telegram group. It's free. Check out the other link, We Trade Your Forex account. Here's a couple of other signals. Now, what we're looking for in this environment is red. We've got, prior to this, red, bar, majority red. There's a short. I don't want to take green signals. I only want these. This one here, closed in money. Pull the stop loss down, profitable. This one here, well, that would have been an entry. There's your stop loss. Okay, we're going to go the width of this plus a little bit. Okay, so there's your stop loss level, range. Or you can look at this and go 2 times the average true range if you like. If that's 78 here, round it to 80, 2 8 to 1660. But I think I prefer to go with the width of the cloud to the left of the signal plus a little bit. We're going to go back and have a look at what's going on over here. You see, this is the kind of thing you want. And again, how wide is your stop? Where's my pencil? There's your thing. See here? That's the cloud. Look at this. That's the width of your stop loss. Okay, no problem. We clear the spike up, and very, very nice outcome. Again, it's a red environment, so I'm only looking for short opportunities. We've had these indicators developed. They are calculated on variations of the average true range. Actually, the other thing to note here is see this orange line? That's a 1 week level. That's a W. Oh God. Okay, that's a weekly. This yellow is a daily. All right. So you see that, you want to clear that well and truly, and go with the width of the cloud here. Going back again, keep going back. Now, where you get mixed signals, okay, this is red, but the majority of these are green. Don't touch it. The high probability setups will be when these two come together, and look at this green signal here. There's your dot. That's green. The majority of those are green. Trade it. I mean, look, there's so much more to do with this that we could talk about, but I won't bother. So I'm looking for the short. You've seen what I pointed out in the on the 4-hour chart, and if you're in front of the charts and you've got access to the indicators, then that was a short back here. Now this is the New York Open. See this line? We're trading into the New York Open. See this? This looks like it could be a bit of a stop run, possibly. So we've got this range, New York Open. We get this fake out. Look for this. and go for another red dot. Okay, that's what we look for. Anyway, with that, guys, I hope you have a great day, safe trading, and we'll see you in the next one.